opportunities like this, I don't think you would have found that same thing 10 years ago. It just, people would have pounced on it. It's just amazing what people are looking at and what they're not looking at.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots. And I am joined as always by the brain trust himself, Mr. Chase Taylor. I'm going to start this one off a little bit differently. This is a job that can make you feel like a real idiot at times. And then it's a job that can make you feel a little too smart at times. And I think that both things are, or how do both
dangerous.
Well, and how did Rudyard Kipling call them? Both not, both like deceptive actors, or the word he used, both imposters. Treat both imposters the same. But I would do that. I would much rather battle with feeling too smart, because that usually means things are going right. And when you have a day like today where you've got your largest position in the book almost up 10, then you're looking after hours and one of your other positions is up 24%. You had another position up 5. I'm reminding myself of those days when I drive home and I feel like if I bought $1 for 10 cents, I'd wake up the next morning, $1 be worth 9.
Right.
Because there are those days too. And
they will return.
But the interesting thing about this to me, and you're seeing this with greater regularity. You're seeing it with greater regularity. You're seeing these big hits and these big pops, not with the usual suspects, right? You're seeing them come out of something that you might call value.
And interestingly, a lot of it's been coming out of retail lately,
right?
Which has been, a big problem for 3 years.
And I will tell you, the one that's popping in after hours is American Eagle. Funny enough, we don't have a large position in it, but we picked it up right around $10 when they launched that ad campaign. Obviously we did our fundamental work on the company, but I will continue to say that, especially in retail, you've got to pay attention to marketing. The correlation between well-run companies and really smart ad campaigns, you and I have talked about this before. It's just too high to ignore. It doesn't mean you just buy an ad campaign, but when I see a company that looks really bombed out on every basis, like an American Eagle, where there doesn't seem to be any legacy problem hanging over its head, just kind of falling out of fashion, and you consider the world we're in and they're running the kind of marketing campaigns that they're running in an inflationary world. And you've got to consider that, meaning, look, American Eagle is significantly more affordable than a lot of other options out there. And when you're targeting it in a way to make it look cool with some good product, which it seems like they're putting out, bringing on a Travis Kelce line of clothing, it makes sense, man. And it's funny how we seem to take a lot of flack for that call, even from some of our own clients. And, it's one of the reasons that I love dealing with value with a catalyst, meaning, it allows you to take a swing at something like American Eagle, that, you can make, what are we up now? 45% on it, 50% on it in a, no, more than that now, probably more like 60, 65, but in a, month and a half. And we bought the thing, bombed out on earnings, stock bombed out, yielding 4.5%, 5%, right? I think people really need to wake up to it. You're watching this occur, right? Google today, right? Bouncing 9% off of something that we thought was going to happen. Didn't really see the argument on the other side of it, but you never know. I continue to see a lot of these big surprises coming out of the not usual suspects, coming out of that value area. And I think it's yet another signal that people got to start looking at different places.
Yeah. And at least for the moment, and granted, the stocks I'm about to name are crushing it this year, but in the last couple of weeks, you see where it looks like, MicroStrategy, Palantir, Robinhood, NVIDIA have all sort of started to lose a little bit of the oomph they had at the same time as you see some of this other stuff picking up. I mean, even not today. Energy got smashed today, but like you even started to see like energy pick up a little, healthcare, biotech pick up a little. So there's almost like a old school dogs of the Dow move where the worst have started to pick up a little bit, and the most among us have become the least among us for at least a week or two.
Geez, that thing is just ripping up over $17 now. And still not a very expensive stock. The other one that cracks me up too is that it's another example to me of how shockingly inefficient this market is becoming. When we were looking at, I remember you were doing additional work on American Eagle, and we were tracking what their debit card swipes, what their credit card action was like. You could see it inflecting.
You can do location data and credit card data, and both were telling you like, hey, this ad campaign's working.
They look, I'm again sound like a broken record, but when I look at this whole board, I'm looking at the only reason that so many of these opportunities exist is because nobody's looking at them still. And like the American Eagle one, when we were looking at the data, I mean, I remember you and I, and look, we probably should have sized the position up even larger when we were looking at the data, confirming what we were seeing. But when you saw an inflection of the data combined with that stock move, and then looking at the valuation and how bombed out it was and all that kind of stuff, and that's what I love about these value stocks is it's not just that you see the upside, but you're sitting there going, now, obviously anything can happen. But when I'm sitting there looking at a stock that doesn't have a massive debt overhang, doesn't look like it's, financially in trouble whatsoever, that is, revenues are down a little bit year over year, but we're talking low single digits. It's nothing that a turnaround or a product refresh or something like that can't going. Then you see a pretty compelling product refresh come. Then you see it being backed up by the online data that you're getting, and everybody still ignores it. It's really opportunities like this. I don't think you would have found that same thing 10 years ago. People would have pounced on it. It's just amazing what people are looking at and what they're not looking at.
Well, yeah. I mean, everyone's too busy pouncing on the latest, crypto or whatever. Speaking of, Dogecoin is going to have its own treasury company now. So if anyone's interested in a Doge treasury stock, there's one of those coming. Some random stock has rebranded itself as a Doge treasury.
Why?
Because it's a great trend that's been working. So they're going to see if they can cash it in. Now, it went down after they made the announcement. So maybe for now it's not going to work. But
God, I just
talk about signs of liquidity.
You know what I was saying? I was getting interviewed on other podcasts today, and what I was saying is, I go, look, man, we own some Bitcoin. I'm not saying that Bitcoin can. If I've always said nothing can stop Bitcoin can go to 5 million. I mean, I'm not saying it's not going to happen. What I will say though, and I think that there are tons of examples of this. Anytime I see, and to me, the treasury companies are kind of the coup de grace. Okay. When I've never seen activity like that surrounding anything that did not end up being a complete massive bubble that led to massive wealth destruction.
Right. It's essentially an unnecessary derivative. And it's just a weird, it's a weird thing. Yeah.
It's a total hype game.
Yeah.
Especially with something like Dogecoin. There is nothing rare or scarce about Dogecoin.
I thought it made some sense the way MSCR did it before you had a Bitcoin ETF, because it was a way on a normal exchange for you to get some Bitcoin. Now you just don't need it.
This is the part I've never understood. And we've got a client that made big money betting on MSTR. Good trade on his part. The part that I never understood is if you've got a Bitcoin ETF there, why?
Yeah, some people view it as like a positive leverage to it. I don't get it, but even then, you can just literally leverage your crypto account. Like, I don't know.
The other thing, and I hate to throw it out there, but if you can effectively manufacture capital to buy a good, then what is that good worth?
And speaking of,
I mean, it begs the question, right? And again, I own some Bitcoin, so please do not sit there and be like, "Oh, Zach and Chase are
this has nothing to do with
anti-crypto."
Bitcoin.
Yeah, right. But I mean, if
the treasury companies have nothing to do with the underlying, it's
right,
just,
but if what is that? What is the value of that? Right? It's like owning an ETF that's got a bunch of liabilities stacked up in the back. What? Why? You're like, well, it'll never be a liability. And you're like, no, that's not true. It's debt. It can be a liability. It can cause some issues.
it can lead to a bunch of dilution in the end. Like, I don't know. Speaking of this, though, one thing you said triggered this in my head, and that was the CEO of Robinhood yesterday came out and said essentially like, oh, well, with AI and everything that's coming, like we may all just be able to just like invest for a living. Like basically like that's all. Yeah. There was multiple things that made me like yell at the clouds yesterday on the internet, and that was definitely one.
Yeah, that's one of them. Just like, just put me out of my misery. Just slap me around.
That was where I went with my my message on it. Yeah,
you know what?
Investing for a living. Where to go?
You know what's crazy to me, man? You couldn't do this.
Could replace labor in a post-AI world.
You couldn't do this with a group of border collies. You couldn't do it with a group of cats. meaning the human being's ability to go back to the well that has decapitated them multiple times in the past,
right? And
to give it another go. You look at them and you're like, do we ever learn? Like I said, you couldn't trick a group of border collies that many times. No. After one, they'd be like, nah, I'm good. Thank you very much. And we've literally heard that before. Now the future is everybody's gonna be investing. I mean, not to mention we'll get into some macroeconomic discussions about if everybody's investing, then who's creating value? Well, AI is going to be doing it. Well, with them,
we'll all just basically bet on the robots on Kalshi. Robot Wars. Those are fun.
Oh, yeah.
So we'll just do that for a living.
Remember that Hugh Jackman movie where he was? They had those
like
robots,
the Rock'em Sock'em robot, basically.
Yeah, where they had like they mimicked the humans. Heavy Metal, I think is what it was called.
I forgot about that. Yeah,
my sons love that movie. It wasn't a bad one actually.
Hugh Jackman's awesome. So
he's also in impressive shape.
Yeah, if you want to feel incompetent about your life, just learn about Hugh Jackman. He'll do it for you.
Yeah, and the physique doesn't do it, he'll bust out in song,
right? Exactly.
And make you look like an idiot.
If you're shredded and you can do Broadway, you have talent.
Yeah, if you got an Oscar, I don't know if he's got one, but he probably.
I don't know. He's definitely an accomplished actor.
Yep. He's doing okay.
And he's better at like the Broadway stuff than acting.
Yeah, he's doing okay.
Yeah, and he's like 1 million years old and is shredded. So
yeah, he might be able to beat us both up at the same time.
I mean, he is Wolverine.
Well, yeah. So he heals very quickly. We got off on a tandem there.
Should we go through the markets?
Yeah. Let's go through the markets because getting back to it, weird day, and I'll continue to say, beware the seasonality. I don't like it's this market's giving me weird vibes.
Yeah, right when I got weird vibes intraday, the market just ripped into the close. So
yeah.
S&P closed up 0.5, Q's up 0.8. With that said, though, small caps and equal weight were both down a little bit. Mag 7 was up almost 2.5. Obviously, most of that being Google and a little bit Apple, like Microsoft, Tesla, like not Nvidia. None of those were impressive on the day. All world XUS was up 0.23, so lagging on the day. The dollar was down 0.17. Oil had a big up day yesterday, a big down day today, down 2.5. Gold up another 0.88. Silver up 0.61. With that said, miners only up 0.62. Maybe finally getting a little bit tired of this move. I don't know. The 2-year down 2 basis points. And the 30-year, we talked about it being up 5 yesterday. Now it's down 6 today. Ostensibly, I would assume on the job openings data being pretty weak. And then let's see, vol closed the day down about 2.5%. Well, front month vol down 3%, barely holding on to a 17 handle, which feels pretty cheap to me.
Yeah, I don't like Salesforce.
And yeah, I don't know what Salesforce is doing, but I saw where their revenue guide was a little less than expected.
Yeah, and revenue, and 7% growth year over year. With AI looming, I'll tell you, if I was a long-term Salesforce holder, which I never would be because I cannot stand Mark Benioff, but if I was, I'd be getting out of that thing. You know what I mean? I look, and that's not a recommendation on any front. Okay, there's probably a lot of people out there that have made a lot of money on Salesforce.
Oh, I mean, no doubt.
I have not. So take that with a giant grain of salt. But when I look at what a threat LLMs, and not what LLMs are going to be a year from now, what they are right now.
Yeah,
right?
well, I mean,
to Salesforce's model. I was talking to my buddy at Microsoft, and he was telling me, he goes, yeah, we got an LLM. It could probably make you a CRM in less than 24 hours that could give you all the capability of Salesforce.
I will say, I think I tagged you and the Blind Squirrel both in this, but there was a really funny tweet that basically said like, oh yeah, we're all just going to have an LLM build our own software the same way we all had 3D printers build all of our own stuff at home. And it's like, well,
that's fair. That's fair.
Because I remember everyone thinking that, and then no one has a 3D printer at home.
Well, here's the difference. I think that's a funny comp, and I think it's also a ridiculous comp at the same time, because you have a material issue with, right? Everybody thinks about the 3D printer, and they don't think about what the 3D printer needs to use to print, what kind of thing it's going to be printing. Do you have the right materials? Do you have access to them? That's a lot different.
Right.
Whereas opposed where I'm sitting there and I've got an expense that I pay every single month on a subscription basis to somebody like Salesforce, and all of a sudden an LLM can whip me up a new one in less than 24 hours.
But not everyone's going to be good enough to prompt it to do it as well as you would want it. My assumption is somewhere in between, is more like someone will use an LLM for you. They will make it better than what you have now for cheaper than what you have now. So yeah, Salesforce will still be in giant trouble. And all those, a lot of software people will be in trouble, but the ones that don't co-opt AI and lower the price are the ones that are going to, go away. And there'll be some upstarts that are like, look, we know how to use this to make things better for you, cheaper for you. And
it's going to change the dynamic. It's really fascinating because, as you saw, it's just amazing how technology scales so fast. I mean, just in the space of 16 months, you've gone from this idea of going, look, the winners are the guys that have the biggest ecosystem, and you're going to pay a subscription to tap into that ecosystem. And everything's going that way. And in the space of 16 months, whether the market certainly isn't paying attention, but whether the market is paying attention or the participants or the competitors in that arena aren't paying attention, but that whole business model just had a massive shadow cast over the top of it. Like you said, I kind of see an in between. I kind of see maybe you pay a small subscription service to a company that designs your CRM for you using LLMs.
You prompt them, and they're just better at prompting AI and cleaning it up for you.
And they kind of maintain it. You can get a hold of them on retainer, and they'll come in and touch up something. But the bottom line is, people are like, well, that's not going to have utility. Yeah, it will, because you'll blast out all the stuff and all the extras that you're paying for in Salesforce that you don't use. You'll distill it down only to what you do use. And there'll be companies out there that do it for a fraction of the cost.
Yep.
And then meanwhile, you're looking at, here's another reason why I hate roll-ups. I freaking hate roll-ups as investments. I know there've been some really good ones. My history, I don't think I've ever invested in one, but here's the reason why. Typically, roll-ups are not making their purchases at advantageous positions. And the reason why is because they can't, because they're a growth story and they sort of have to pay the going rate that day to keep the growth going, right? So what typically ends up happening is you get this roll-up that bought all these assets that on the face of them look good, but they didn't get great prices for them, right? And then something underneath the surface changes, and it really casts a shadow on those purchases they made in the past, because all of a sudden, like for instance, I bet if we went back and looked at a bunch of the purchases Salesforce made over the last 5 years, I guarantee you there's a good percentage of them. I have no idea what, but a statistically significant percentage of them that are probably rendered battle ineffective with the emergence of LLMs. Yeah, not all of them, but
a lot of them. Here's the way I would say it: a lot of them probably went from being growth in nature to being more like cigar butts in nature. You still make
that's
money.
Fair. That's very fair.
You keep those legacy clients.
If you paid too much of them,
or whatever, but
if you paid too much of them, there's probably some that are going to be melting ice cubes.
Look at the chart of Salesforce. Like, it's telling you things are bad. Like, it's in a pretty big drawdown. So
yeah, the other one that caught me off guard, I mean, I still don't understand the valuation on it at all. But in the last year, Apple's only up 6%.
That sounds right.
Yeah, I mean, it shouldn't be up that much, but
And that's really all just in the last month. So
it really,
it's all since the blind squirrel we were talking about earlier, since he faded it publicly. That's when it started going up.
I mean, the dude's got some shot. I mean, he draws a lot of water in this town, you know. That was another.
I'm gonna get a nasty quote. DM for that comment.
Why? We do not. We got nothing but love for the blind squirrel.
I know, but I said it started going up as soon as he started shortening it.
Oh, well, yeah. I mean, welcome to the club. That just means he's one of us.
Welcome to my futures account this year.
Yeah. This is a different year. Sitting there trying to, it just shocks me to see there's plenty of stuff that is behaving really irrationally, but the stuff that is behaving that kind of makes sense is that's kind of shocking me too. It's like you're just kind of sitting there going, boy, it's a long time since I've seen fundamentals work.
Speaking of this, a little bit tangentially at least, Kevin Muir's latest piece was about how the rest of the world is doing better than the U.S. But what's interesting about it is, like, obviously Kevin is on top of markets, right?
Yeah,
the guy knows everything about markets.
Yep.
He's really on top of stuff. And in his piece, you could tell, like, he was surprised by how much most of the rest of the world was beating the U.S.
Look, man, it reminds
me.
And
if he's surprised, I mean,
it reminds me of the Dave Chappelle show, right? Where they interview, for those of you that don't know, they interview Rick James, and they're getting all of his crazy antics, and it's kind of going back and forth between the sketch and the actual interview with Rick James. And finally, at one point, exasperated, Rick James just kind of looks at the camera and he goes, "What can I tell you? Cocaine's a hell of a drug." You know, kind of reminds me of these markets right now, right?
I want to do so many quotes from that, but none of them are clean, so I can't.
No, yeah, that's and notice I didn't advise that you run home and watch that episode. But I mean, 15 years is a hell of a drug, even for guys like, and there's a certain part of me that even falls victim to it, where even though we're not positioned that way, a part of me has looked at our P&L a bunch of times this year and been like, really?
Yeah.
That really? You know, we had a couple of those moments today. And the reason why, again, like I said, I believe investing still works. It's been very frustrating at the lack of fundamental involvement and all that kind of stuff. But eventually, investing is about discounted cash flows. It just is. And eventually it was bound to come back around and reemerge and reassert itself. And at least for the time being, it certainly looks like that is occurring. The interesting thing I think about that is what it's kind of corresponding to, meaning it makes a lot of sense right now that kind of the trade issues and the tariff issues kind of seem to start this. And so far, I mean, you can't ever get in the middle of something when it's still unfolding and really determine it. But so far, surprisingly, it appears like it's playing out a lot like we thought it would, which our kind of thesis going into the year was we thought that this whole tariff situation would certainly make people have to reshuffle their own decks, bring in some, return some capital at home and reposition themselves to compensate for a changing day. And I remember at the beginning of the year, we kind of thought, hey, I think that when people go to, start redeploying that capital, they're going to look around and go, oh, wait a second. And again, so far that seems like what's happening. You can't really explain it any other way other than, this thing started getting people to at least question, hey, are we too heavy into US?
Right.
And then you can just see it feeding into other parts of the market that have been ignored for so long.
Yeah. And if you play it forward 2, 3, 5 years or whatever, assuming things stay roughly the same, which is a big assumption at the moment, obviously, like it just makes you less competitive. So if you're going to make yourself less competitive, it would make sense that capital will find its way to the things that are more competitive. So it's sort of, that's just nuts and bolts, blocking and tackling, kind of econ 101 stuff.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate and actual performance may differ.
To reiterate, because I had another conversation with a client that reminded me of something today. And I know your stance is a little bit different, but whenever you hear us say something negative about tariffs, I'm not taking a shot at the administration. And if I say something positive about tariffs. I'm not affirming what the administration has done. My argument all along is I don't think Trump believes what he's saying about tariffs. Now, he's done a couple things that have made me question that point of view. But my thought all along, just to reiterate, is I've always believed to understand tariffs are not good for economies long term. They're just not. It's like trying to make an argument that higher taxes are good for an economy. They're not.
Right.
So, because the client was asking me, well, you don't seem like you're on board with tariffs. And I go, I don't think anybody's on board with tariffs. I don't think Trump's on board with tariffs. Now, in Trump in his own way, he's going to have to make it sound like he is because he's negotiating. And if you're holding a gun and nobody thinks you're willing to use it, it doesn't matter.
I'll push back because but I mean, we've had this debate before where I do think he's literally likes them. The reason, the evidence for that now is like we have finished negotiations with multiple countries and we kept sizable tariffs on them to include countries that removed all of their tariffs. And we kept, like, I think Vietnam, we kept it at whatever, 15, 20, 25%. Can't remember now, and they took theirs off.
I know, but my point is you've got other ancillary issues with Vietnam, meaning Vietnam has been a place where China has used,
but that's
routed things.
That's in the
Vietnam.
trade deal that those would be 40%. If we catch you doing that, it'll be 40. But still, like, they took all theirs down and we're like, cool, we keep it here.
Yeah.
And we have a global minimum essentially of 15.
You could be right. And like I've said before, if you are right, I will be I've got no problem standing up on top of the building and be like, I got that one wrong. My whole thing is I want to see what happened to those tariffs after he gets a deal, if and when he gets a deal done with China. I cannot believe that he actually thinks that is a solid long-term viable solution. And it may help on the periphery with deficit situation. It may help. Sure. But the question is, what is the economic cost? Because I mean, like, this isn't debatable, right? Like,
if tariffs were really good,
everybody would do it.
Right. And mid-century Argentina would have been a boom instead of a bust. Like, it just.
Now, granted, we're in a little bit different situation in the global economy than Argentina was at that time.
Sure.
But, and look, the reason I bring that up is the amount of weight you throw around in the global economy, it has a big impact on how inflation impacts your economy. When you're the world reserve currency, that has a big difference on it. When you're the largest economy in the world, that has a big difference on the impacts of inflation and, currency degradation, all those different things. It plays differently than it's going to play in somewhere like, like a Brazil or like an Argentina. So, there are definitely going to be some differences and nuances there. But we'll see. I just can't get there. I understand why people think that he really believes that. It's just hard. I just can't. I just can't believe anybody actually believes it.
I mean, I wish he didn't, and I hope you're right, because I think it's, I think it is bad for us structurally, and over like medium and long term. It's very, very bad, and mostly from a just pure competitive standpoint. That's what bothers me about it. Is it's like when you erect those barriers to competition, you get less of it, and that's usually not good. It's like when rich people give their kids everything, like what is the kid's work ethic like if they have everything handed to them? It's kind of like, if you're GM and it's like, whoa, we won't import any cars, don't worry about it. You do you. It's like, is GM going to make the best cars in the world? No.
I mean, no, because
that's taking it to extreme. Obviously, we're still importing cars and stuff, but point being, like, if you limit competition, are you likely to get the best from your own? And my answer is no. And that,
no,
that doesn't really show up. And I don't even think that shows up big in his own administration. But if you keep that stuff for 20 years, then you look back after 20 years and you're like, what happened?
Well, yeah. And then, I mean, not to mention the idea that it kind of feels like you're eating Oreos while you're trying to brush your teeth. Meaning, okay, so we want to bring back manufacturing, but we're going to make all of the inputs more expensive.
Right.
Like, again, now to be a little bit more critical of the administration. It's one of the reasons, and granted, they've only been in office 7 months,
Sure.
and you got to give them time. But this is why I've been a little bit frustrated and a little bit disillusioned at the pace and the veracity in which they've gone after regulation, because I really think that is something that is needed to offset the negative impacts of tariffs.
Sure.
I think it's something that is needed to offset the negative impacts of inflation. And I think that is a real area of, dark soil, right? Good, solid, dark soil that I think would help a lot of these things. And it just seems like the focus off that regulation stuff. Granted, they got a lot on their plate, but it seems like kind of the focus has come off that a little bit. And I would like to see a return to that, because, I'm not an anti-regulation guy. I just view regulations as a pendulum, and we've been increasing them for a decade and a half.
You'd have to have something wrong with you to think we aren't over-regulated.
Yeah. Yeah. I think that's something that, like any kind of sober-minded market spectator, regardless of which side of the political aisle they sit on, if they're a fan of free markets, I think they would sit there and go, yeah, you guys have overdone the regulatory side.
And to go back to what I was just talking about, like having your companies be competitive globally, which is to me obviously important. Like it's yes,
a big one,
right? It plays into it too. And I think if you ask the average manufacturing company in America right now that would like to export their stuff, like what's holding you back, like regulation stuff would be in their top 3 or 4.
Yeah, it's all over the place. And remember, the reason why this is important is because at the same time, tariffs, like I honestly believe that you need, in order to, if you're a fan, if Trump does really like tariffs, and if you're a fan of that policy, you should be pounding on the table for reduction of regulations harder than anybody, because to me, it's the only silver bullet I really see that helps you address the cost side of the issue. If you've got tariffs on, right? So we've got the tariffs on, the now attacks on the economy that make inputs more. How do you offset the negative impact of that? I don't really see there being another way, at least here domestically, than to drastically pull back on regulation.
Right. I mean, that was one of, and the tough thing too for me is they really emphasized that early on, and even campaign and everything. Huge part of what Besson was saying, and if you listened, read the tea leaves early on, it was pretty clear Besson wasn't a tariff guy, kind of trying to talk Trump down on it. And the next thing you know, we don't get much talk about that deregulation side. We did some on the banks a little bit, which maybe is the one place we shouldn't have, but whatever. But then you get to this point, and now he's like pretty hardcore salesman for tariffs. And as he even said that they added to GDP yesterday, which was another one of those things that I saw on the internet that made me yell at the clouds.
They did in that one quarter.
Yeah, that's not what he was saying. He was trying to make it sound like it is value add to have a consumption tax on. It's like, come on, man. Like, yeah,
this is the part of politics that I just hate.
Yeah,
and this is also the part of politics that I think is expired, and this is the part of politics that I think is dead, that too many politicians aren't aware of. Right, like the old days of repeating it on the media, continuing the lie and saying it over and over. That used to be a political tact, right?
Right.
I just think that the utility that it delivers, even for the politician, I just think it's diminished to the point where I think you would win way more people over if you were just honest. I think if you came out,
totally.
If I'm right about Trump, okay, that he doesn't really like tariffs, I think that he would get further if he says, look, no, I'm not a huge fan of tariffs over the long run. What I am a fan of is tariffs in lieu of what we've been doing to ourselves for the last 30 years, right? So the quicker we can get off tariffs and get solid trade deals in place, I'm all for it. But until we get those trade deals, we're not going to sit by. You know what I mean? Like, whether you agree with that statement or not, I just think that it makes so much more political sense now, because, otherwise you just have these, you're back to these parties saying ridiculous things that everybody knows isn't true, back and forth. And only the people in the middle that really don't understand what's going on get swayed by it one way or the other. And
not just saying stuff's not true, but like the gaslighting, like Orwellian stuff, where you're saying the thing that is literally not true, which we've had for a decade too. Our mutual pal Jason said something to me today that like literally talked about this. Basically, like you just don't get to lie in the information age. Like the way, you think back to like the COVID stuff, where it's like people will figure out that this isn't right. Like this, like you can't say
They
that.
will, and then yet huge
And then they
contingencies
stop
of
trusting
them,
you.
and then huge contingencies of people continue to believe it too. So
Right.
like,
And now like because we were talking about this today, because the Florida like whatever guys said, like basically like, oh, we're just gonna not mandate any vaccines at all anymore. And it's like, whoa, like we went from like one extreme to the other. But if you look back, if you lie to people about this stuff, they get really suspect, and then you go flying the other direction too far. It's like,
well, it's one of the my wife and I were talking about this last night, and it's one of the things, and I remember thinking this at the time. It's kind of one of those things took you a while to put in perspective and kind of formulate it and process it, but it was one of the things that was so damaging, in my opinion, about so many of the lies that were told over COVID, is that when you tell a lie, when the supposed consequences of not adhering to that lie, when they're so great, even people that have doubts about the veracity of that statement or whatever that is, they have to believe it because the consequences of not believing it and being wrong are just too bad. Right? Meaning, I throw a lie out there, as ridiculous as it is, if the downside is a winter of death for everybody who doesn't get the vaccine, a lot of people just are like, well, I think the vaccine's nonsense, but I got to be pro-vaccine because I don't want to be a part of the winter of death. Do you know what I mean? And you just get this reflexive cycle of just the death of truth. And, I mean,
we're in the thick of it.
Yeah, it really does. And I don't know where to go from there.
No, that was dark. We should talk about something more happy than that.
Hey, it's football season.
Yeah, that's way more happy.
Yep, we got a fifth grade showdown coming down this
NFL
weekend.
NFL kicks off tomorrow.
I mean, I think more people are interested in what's going on in the fifth grade football world, but if you're into that NFL kind of thing, I get it. But the real action happens at the fifth grade level. We all notice that.
Yeah,
right. And we got some dogs. I'm telling you,
the wing tee line up and run every play. It's pretty thrilling.
We're looking strong. But you should see the way I'll tell you what, it's tough to figure out where that ball's going, because that ball handling has been getting good.
Nice.
Getting the good fakes going. And I'm just the other thing I love about the wing tee is it is if you are a believer in one play setting up another, right? It is just the perfect offense, because everything looks identical. Right. And it's just, I love that. I
remember playing against a team in high school, and every play, there's two wing backs and the tailback.
Yep.
And the quarterback would turn his back to you.
Yep.
And there's people flying everywhere.
Yep.
So you have no idea where that ball's coming from.
So
it makes you stay super disciplined.
We utilize that back turn like you can't believe it, man.
Yeah.
It's good stuff.
And we had infinitely more talent than them, but man, was it annoying playing them.
Well, and that's why that's why you're seeing high schools adopt it again. Because if you're out there, like my buddy's a head coach of Enum Claw, right? Perfect example. He's got a bunch of big, strong farm boys out there, tough kids, but he doesn't have as many of the athletes. Right. He's not going to have as many of the top speed burners, things like that. And so wing tees work beautiful for them.
Tighten the game up.
Yep. Like he said, we want to have a fist fight in a phone booth.
Yep.
Right. And the beautiful thing about that is, with all the 6-on-7 and everything that kids are playing, the thing that they know how to do the least now is stand in the box and bang.
Yep. Linebackers are the size of DBs.
Yep.
So if you put those corn-fed boys in their chin, they don't know what to do with that.
No.
I've been saying this for years. Like, after everyone went spread, like you said, 7-on-7 tournaments, and like that's like the sexy thing. It's like, cool. Find yourself some good offensive linemen and run it down people's throats because they can't handle it.
Well, and not only that, but then the way you like, I understand people's being so enamored with that because of the high scoring offense.
Sure.
But what they don't understand is that when I can get you for 4 to 5 yards a carry, I have total control over the game.
Yeah. I can have a mediocre defense that becomes good all of a sudden because they're rested.
Yep. And you're taking big shots constantly, which means I can rush your quarterback. I can have my guys lay back, because here's the other thing. When I'm running down with, 4 or 5 yards in a cloud of dust, and my guys are just more physical than yours, we cannot run some plays right. They're not complicated, right? When you're running a spread offense, if anybody's just off a little bit, it's just so much easier for things to go wrong.
True.
So anyway, I'm sure this is why people log in.
Yeah, it made me feel better after the dark almost close there.
Yep. So let's take that happy feeling and let's get out of here. So anyway, all right, you guys, thank you for joining us. As always, follow us on social media. Just Google, search, look in YouTube, Know Your Risk Podcast. Get the video feed from YouTube. Follow us on Twitter at KYR Radio, at Pinecone Macro for Chase. You guys know where to find us. Have a great night. We'll see you tomorrow. And this Friday, I got dates lined up. Okay. So this Friday at 9 a.m., we're having our discussion with the guy from Microsoft. I haven't said that before, but head of the AI group there. And then having a client and a friend of mine who is a very renowned public speaker and executive coach, high functioning, high performance, some big names, Fortune 500 companies. He's the guy that's, first of all, he was a ex-NFL player that was a high school coach to me and kind of became a mentor. And he's been with me through the whole process, starting Bulwark, and he had a ton to do with how we executed, how we started. He and I'd meet every 3-4 months. And I think it'll be just so educational because he's made such a huge impact in my life. Just kind of one of those deals. I want to share the way he looks at the world and how to tackle issues and how to be more productive. So we're having him on Monday. So we've got two good back-to-back interviews coming out here in the next few days that folks shouldn't want to miss. So I'm excited to do them. Long time coming, but we're finally out of the summer months. So out of the doldrums. All right, guys. Thank you so much. Have a wonderful evening. And as always, we'll see you tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC-registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.